Boy, oh boy, am I glad to have seen the back end of May. That's where we are today. That's hey, I could actually audition for Coin Bureau. If you're glad to see the end of May, you'll be glad that it's June today. And today is June. May was like the most boring month in crypto that we've ever seen. And we finished May down 7%. So we didn't actually get the green close on May that we wanted. And now we're in June. And there's lots to talk about because we know the 1st of June was the day that we were promised an Asia pump. How many of you woke up this morning and were excited for this Asia pump because Hong Kong was opening up the East for China to start trading crypto? And we never actually got the Asia pump. So today we're going to talk about what this Asia pump is. I also want to talk about this chart over here because as much as I've been a little bit of a skeptic, you cannot now deny that ETH BTC chart has actually broken through this trend. And I think I'm going to show you why, and I'm going to show you a whole new world that is happening around ETH. Then I've got some big scoop for you about Jerome Powell and Jerome Powell's big plan. Okay, Jerome Powell's got a massive plan to crash the markets, and I'm going to show you the whole plan to crash the markets. It's huge. Then we're going to talk about Phantom. We're going to talk about Injective. I'm going to show you one token that I think is going to absolutely pump. I think you may have an opportunity to buy it. I think you may have a real opportunity to buy this token today. What else? What else is happening? Let's quickly look at the banter bubbles. Lots. I mean, some are green, some are red. Bitcoin's not looking great. What else? There's so much going on here today. Let's just have a look here. Okay, well, there's so much to do. So anyway, let's go. You're new to the channel, you know what to do. Smash that subscribe button, like this content, get this content out there. I promise you that even though we had a slight technical issue at the start, I will be bringing you the highest alpha per minute show on the interwebs today. No doubt about it. And today is going to be a massive show. I didn't actually believe that we're going to have so much going on the show today, but here we are because it's been a very boring month on the markets. And with the boring month, I thought that we may actually just have a dry show, but it's not a dry show today, and I'll tell you why. One, we've got to look at this Asia pump that we were promised, and I know that none of our community were expecting the Asia pump because we actually warned you guys that this Asia pump actually wasn't going to happen, but we are going to look at the facts around the Asia pump. We're going to look around the debt ceiling deal. The debt ceiling deal is done, but I think now the scary part actually begins. So the hard work that the senators had to do is done, but I think that this is the part where it actually gets scary, and this is the part where they're actually going to steal your money. And I'm going to show you 3 or 4 ways that they're actually going to steal your money in the next 3 to 4 months. And if you're not paying attention, you're going to get caught out and your money is actually going to be stolen. Then we're going to look at altcoins, and we're going to start looking off at the ETH BTC chart, because I think the ETH BTC chart is actually going to tell us a big story. It has broken out. I was quite a skeptic about this chart, but now you can't deny the fact that it is actually broken out. And I'm going to show you why it's broken out. Then I've got a list of altcoins that you should be looking at. I know you don't feel like buying altcoins. I know it doesn't feel like the right time to buy altcoins, but I think, hear me out here, I may actually have something that is worth talking about here. Cool. So big show. Let's go. Let's get into the meat and potatoes of the show. And I think let's start off by looking at where we finished in May. 7% down. We didn't get the green month. Now we're starting in June. I really hope that June brings us a better month than May. And I agree with James Stratton, and I disagree with James Stratton, or James Van Stratton. So he says, sell in May and go away was correct. No, not really. Because if you would have sold in May, you would have sold into this 7% down. It should be sell in April and go away, and then avoid losing 7% in May. Everyone says sell in May and go away because May went down. If you would have sold in May, you would have sold somewhere in this negative 7% pump. Now we're in June, and as I said to you guys, the beginning of June is the beginning of what we thought, as James Van Stratton says, is good morning Asia. And that's because today Hong Kong theoretically opened up to retail investing or retail trading in cryptocurrencies. And we warned you guys not to get too excited about this Hong Kong news because the 1st of June is actually a nothing burger. Why? Because the 1st of June is the date where they open up applications for licenses to allow people to trade crypto, and not actually when the money was actually going to start flowing in. And right now, as it stands, only 2 companies have actually got licenses. We've got OSL and we've got Hash Blockchain Limited. And by the way, the guys from OSL will be on the show tomorrow. We're going to have a big Asia banter here tomorrow, a big Asia Friday banter, where we're going to talk to people who are actually in Hong Kong so that they can give us a feel for what's actually happening on the ground. And we did do some research to see which of our favorite exchanges have actually applied for licenses in Hong Kong. So right now, those that are approved, Hashkey and OSL, but you've got 𝗬𝗏𝗽, you've got OKX, you've got Bybit, you've got BitMEX, you've got Bitmart, you've got Gate, you've got BitGet, that all have been confirmed that they have made applications in Hong Kong. So we didn't expect the market to shoot up today because of the Hong Kong trading, but we did open the applications, and now we know which exchanges are actually going there. And remember, there's a very limited list of coins that people can trade in Hong Kong, and that's probably why we're not getting this Hong Kong pump that everybody promised us. Also, what we got today was we got news that there is a stable coin, a first USD-backed digital stablecoin like USDC and like USDT, but this one is actually regulated in Hong Kong. So the First Digital is introducing a new stablecoin that will be pegged to the USD, and this one, it will be regulated in Hong Kong. Now, this is super interesting, and the reason why this is super interesting is because if you remember what the legislation actually said, the legislation actually said that stable coins actually are not legal in Hong Kong. So you can trade in Hong Kong, but you can't trade in stable coins, and you can't be in stable coins unless we get a Hong Kong regulated stablecoin. And that is exactly what this new stablecoin is. And I saw a tweet here. I saw a tweet by CZ said that there is, that you'll remember that they had BUSD, right? CZ had BUSD, and BUSD was shut down by the regulators in the United States. It was actually shut down by the SEC. You'll remember that BUSD was issued not by Binance, it was issued by Paxos, who were actually licensed in the US, but they then claimed that BUSD was a security. And so they destroyed this $23 billion market cap coin, which is now only sitting at $5 billion. Obviously, CZ is quite salty, and the growth of that has gone to USDT. In Hong Kong, though, USDT is not legal. It's not a regulated coin, and so you can't be trading legally into that. And so what CZ says is, you know, right now, at the time, he says in hindsight it's clearer, but at the time it didn't seem like it was the wrong decision to go and play in New York. But what he's saying here as well, he's saying Hong Kong has actually responded, because he says, but it's clearer now with hindsight, if DUSD is regulated in Hong Kong, the industry responds, and that's exactly what's going on here. You can kind of see that Hong Kong is now capitalizing where the US is not or hasn't been able to capitalize. And so I think this is quite big because, you know, we're starting to get regulated stable coins in Hong Kong. We're going to start getting regulated exchanges in Hong Kong. And if people are right, and this is the beginning of a move to China and to open up the rest of Asia, then what we need to do is we need to keep our eyes on the market cap of this FDUSD, because that'll show us how much trade is actually coming from Hong Kong. That'll show us how much interest is coming from mainland China into Hong Kong. If we get FDUSD going up, then we will know that there is a lot of interest in Hong Kong. So we'll keep an eye out of that for you. We'll start displaying the FDUSD chart. And remember, the only reason why we can do this is because stablecoins, all the other stablecoins aren't actually legal in Hong Kong. And so we've got one regulated stablecoin in Hong Kong. So again, the Hong Kong capitalizing, or Asia capitalizing where the US have failed. I showed you guys the charts yesterday of how trade had moved from, I think, 64% in Asia to 87% in Asia, or something huge like that. We spoke about that yesterday. So yeah, well, the US is really digging their own grave here when it comes to this. Anyway, let's move to the US. Let's go and move to the US. The theatrics of the US debt deal continue. So yesterday we finally got the vote. As usual, when it comes to US politics, it was filled with theatrics. Here is the actual vote for the deal to get passed, the debt ceiling deal to get passed. In the House, of course.
The nays are 117. The bill is passed.
Yay!
Without objection, a motion to reconsider is laid on the table.
So the bill was passed. The bill was passed in the House. It now goes to the Senate. It's pretty much a done deal. But as I said to you, everything in the US must come with theatrics. It's not going to be without theatrics. So you know what US politicians do? US politicians, let me just switch this off. US politicians, what they do is they use every opportunity to make theatrics to knock down the other party. I keep saying that. And so this is, of course, no different. This is actually a big opportunity to knock down the other party. And of course, you're going to get all the normal people, the normal loudmouths coming out. Bernie Sanders says, I cannot in good conscience vote for the debt ceiling deal. I don't remember him coming up with anything better. We had Rep. Mary Miller. Listen to what she says, because this is important for the next section of our show.
Good afternoon, everyone. Congresswoman Mary Miller here. I've come back to DC to vote no on raising the debt ceiling another $4 trillion. And there just are not enough cuts in this bill to warrant a yes. We need to defund Joe Biden's IRS agents, and we need to defund his green bad deal. It's doing nothing but helping China. It's going to bring us to our knees. And we need to return to President Trump's.
So I agree with her. They want to defund the Biden IRS. I'm going to show you why that's such a big thing, because the IRS have now got a ruling, which we're going to talk about later, that they can actually subpoena your Coinbase records and your exchange data records and make you pay the taxes or catch you out for tax evasion. But we'll talk about that later in the show. As I said to you, though, the theatrics continue in Washington. They made such a big scene in the build-up to this. The theatrics on the way up this debt ceiling were, of course, not disappointing. We knew it was going to happen. I told you it was going to be a big nothing burger. But again, just full of theatrics. Ultimately, if we analyze this quite critically, we're saying, look, this is like the 79th time in the last 70 years, 79th time that they're actually raising the debt ceiling. And you know, now the debt ceiling has gone up from 31.8 trillion, and they can continue. This time, the way that they did the debt ceiling deal, they didn't actually agree an amount. What they said is, they said, we can continue to increase until January 2025, which is after the elections. So, and they estimate that this is going to go, that the US deficit or national debt is going to go up by at least $4 trillion. That's pretty much where we are with the debt ceiling. But that is actually where the work begins. And I'll explain to you why. A lot of people think that as soon as the debt ceiling is raised, that's the end of it. But that's not really how it works. And I tried to explain it to Fred earlier, because Fred was asking me the question. I said to him, Fred, you know what raising the debt ceiling is actually like? It's like when you go to your wife and you say to your wife, look, honey, you know, we've got $200,000 of debt, and we want to, and I want to increase our debt that we have as a household to $250,000. And then you have an argument with your wife. Your wife says, no, look, you know, we can't get into more debt. We want to have more kids. We want to, and she says, and you say to her, please, I really want to increase the debt. And eventually you have a vote in the house. And of course, whatever she votes goes. And then she says, okay, you know what? You can actually increase the debt in our house. That's what's basically happened now. That does not mean that they've actually got the money to actually increase the debt. All they've said is, you can increase the debt ceiling. It's like you have agreement from your wife to tell you that you can take more debt. But the thing is that now the real work actually begins. Because what do you need the debt for? You need the debt to replenish your bank account. And the Treasury is actually no different. Remember, I showed you that the Treasury had completely flattened its account. They spent all the money in their account. In fact, they got to a point where they had $38 billion in their account, and that's like absolutely nothing. And now what they've got to do is they've got to replenish their account. So how do they replenish their account? Well, they go to the market and they sell T-bills. What is T-bills? It's debt. So they go to the market and say, hey, who wants to buy this debt, this $1 million of debt, where you will be earning 5% in the debt? And then they try and get people to buy the debt at a yield of whatever the yield is. In fact, if you look at the yield, I'll show you the yield. For those of you who are a little bit more technical, this is the debt profile of the US. Right now, they need to be paying 5.25% to match what is the current interest rate. But if you look at all the maturities of all the debt that they've sold, they're paying about 2.11% because they sold it at different times. Why am I telling you this? Why is this so important? As I said to you, the US has just gone through the first hurdle. The first hurdle was getting the wife to approve that you could increase your household debt from $200,000 to $250,000. But now they actually have to go and raise that money and get the debt. How are they going to do that? Well, let me show you how they're going to do it. And to be brutally honest, this is I got this video from Elio, who made a great video this morning. You should go and watch it. But listen to this video from Jerome Powell before he became the head of the Fed. Listen to this.
So bad economic news drives people out of stocks and into bonds. And when people go into bonds, they bid up the price of bonds, and that bids down the interest rate that the government is required to pay. So that's what's happening now. We had bad economic news last week. Another thing that draws people into our bonds is the turmoil in Europe, as it becomes more and more clear that the Europeans have not figured out what to do with the potential default of some of their major nations. And so global money.
So what he's basically saying is, listen, if you want to get people to go into your debt or to buy your debt, which is, by the way, what needs to happen. Now the Treasury needs to top up its account. It needs to get about $1 trillion. How are they going to get people to top up their account? Well, they've got to put out bad economic data. They've got to crash the markets. And if they crash the markets, that is what's going to get people to go into the government debt, which is yielding 5.25%. So if you want people to go into 5.25% yields, what you got to show them is that investing in the stock market is actually a really bad investment. And how are you going to do that? Well, it's very simple how you're going to do that. You're going to look at the stock market. You're going to pump the stock market. Let me show you how you pump the stock market. You go to the NASDAQ and you say, let's look at US Tech. US Tech is the NASDAQ. US Tech 100. You go to the NASDAQ. You pump the NASDAQ up. You get it to a point where you get to the point where the debt ceiling gets passed. And then you bring out bad economic data and you crash the markets. And if you crash the markets, what you're effectively doing is you're pushing people to go into fixed income or treasury bills, which is exactly what Jerome Powell said in this interview. Listen to it again, because I think now that you got context, it'll make a lot more sense.
So bad economic news drives people out of stocks and into bonds. And when people go into bonds, they bid up the price of bonds, and that bids down the interest rate that the government is.
And that's pretty much exactly what they're going to do. Now, there's another little hidden thorn here. And the other little hidden thorn here is a very simple one. Yes, the markets have really gone up. The markets have absolutely been pumping. In fact, if you look at the markets now, you look at the NASDAQ. The NASDAQ is up since January. The NASDAQ is up 33%. And if you look at the S&P 500, just we can go to the SP 500. The S&P 500 is up. Let's go to January. How's that? Let's go find a January start. So the S&P 500 since January is up 11%. But is it? That's the real question. Because if you dig a little bit deeper, what you'll realize is that there's actually only 5 stocks in the S&P that are going up. Apple, Microsoft, Amazon, obviously NVIDIA, we spoke about NVIDIA, and Google. All the other ones have been flat and maybe going down. But because these are such big stocks, because these are the main stocks, they are driving up the whole index. So what people are actually doing is people are running to these stocks to be safe. Now imagine what happens when they bring out bad economic data and they crash the prices of the stock market. And that's probably the only way that the Treasury can raise another $1 trillion really, really, really quickly, because the Treasury needs to raise $1 trillion to replenish its accounts. So it's a very, very, very scary scenario, and one that we should keep an eye open for. I don't want to alarm you, but again, if you were Jerome Powell and you're working with Janet Yellen to try and get Janet Yellen to top up the $1 trillion Treasury account, which they need, how are you going to do it? How are you going to, in a period like this, where there's so much political uncertainty, so much turmoil in the United States, there's a potential banking crisis and everything else that's going on, how are you going to get people to buy US government bonds? Well, you have to increase the interest rates and you have to make it cheaper. And how do you do that? Well, you collapse the stock markets. You collapse the stock markets, you push people into fixed income securities. Very, very, very simple formula. So that's one way that the US is actually going to steal your money. And The other way that they will steal your money is that they will inflate your money. So, I mean, one way is to crash the markets. The other way is just to carry on taking this debt and increasing the debt ceiling, and just doing that, basically inflate your money until your money actually becomes absolutely worthless. And I don't know if you guys saw this this thing from Elon Musk yesterday, but listen to what he says. I mean, there's a lot of truth here.
This is a gift. It's an IOU worth $44 billion.
Thank you.
So
well, pretty soon 44 billion won't be worth that much anyway.
that's a good point. So
You see, he says it. I mean, he says it. He says pretty soon $44 billion won't be worth that much. Anyway, he's right, because if the US continues to take debt and increases this national debt by $4 trillion before the next time that they talk about the debt ceiling, if they are issuing more money, creating more inflation, inflating your money away, and effectively stealing your money from you. And if that's not enough, then they will steal your money from you by crashing the markets so that they can get investors into treasury bills. And yeah, I mean, that's pretty much what they're going to do. And if they don't do that, then they will steal your money by taxing you. It's as simple as that. And I said to you, the reason why I want to talk about this is because there has been a ruling that the IRS can actually access user trading data from centralized exchanges. So IRS can access Coinbase user trading data, according to the courts. I read this judgment. It was around a case where a guy turned around and he said, I don't believe, his name was James Harper, he said he filed a suit in August 2020 against the IRS, its commissioner 𝗪𝗪𝗧𝗪. It alleged that they had violated his rights to obtain trading records through the John Doe summons, where they gave Coinbase a summons to give all the user data. Anyway, the judge in this case actually ruled, if you look at the ruling here, the judge actually ruled, he says that the Supreme Court, Congress has granted the service of broad latitude to issue summonses. The IRS actions at issue in this case fall squarely within the broad latitude, and Harper is not entitled to protection. So that means that if you're trading on a centralized exchange, you know that centralized exchange can be subpoenaed to give your trading records to your tax authorities, whether it's IRS, whether it's whatever it is. Be careful, because now you've been warned. There's a ruling, and you know that if the government doesn't steal your money through inflating it away, if the government doesn't steal your money through crashing the markets, they can get people into treasuries. If the government doesn't steal your money by increasing interest rates, which, by the way, I've heard, based on the new jobless data that came out today, we had the jobless data come out today, slightly more jobless claims, which is a bad thing for those people who are unemployed, but a good thing because it means that Jerome Powell maybe won't raise interest rates. And so yesterday, when we looked at this, there was about a 70% chance of getting a 25 basis point rate hike. Today, there's a 75% chance of no rate hike this time. Now, that came from a couple of things. The first reason that happened was because the jobless claims were a little bit higher. So that's like one small thing that maybe made people think. The second thing is, you have this guy, his name is 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 because his name's Nick, so they call him Nicky Leaks, because he always calls the Fed cycle correct. And he said Fed Governor Jefferson makes an effort to keep June a skip on the table, a bold decision. So he's saying that he believes that they should skip raising rates in June and then reevaluate and then do it and then maybe consider doing it in July. James, is everything okay, bro? It's just a bit stiff. He's doing this. He says he's a bit stiff. So let's watch that. This is pretty good news. You know, if the Fed whisperer, if this 𝗏𝗏𝗏𝗏 says that there's no rate hike, he's called it right 9 out of 10 times. So we should keep watching what's going on here. So listen, I think net, the government is going to steal your money. They're either going to deflate your money by issuing more money, or they're going to crash the markets and take away all your gains so that they can get people into their T-bills to fund the big hole that they actually created. And I think I showed you guys how they do it. And if you do land up making more money, they will take it from you via this IRS ruling. Because the one chance that you actually have to make life-changing money is actually in crypto. And now what they've done is they've agreed that the government can basically subpoena all of Coinbase's records and get, well, not only Coinbase, it's actually every centralized exchange. Now becomes like a legal precedent. So not good news there. Although there is some good news. There is some good news. The some good news is that a lot more people are moving into DeFi. So I think that's like decent news. A lot more people are now moving into DeFi. There's a couple of reasons for this. I think the first reason is people don't want to be on centralized exchanges. They've realized what happened to FTX. They've realized that centralized exchange records can actually be subpoenaed. And so they're saying, look, I want to get into DeFi. That's not the only reason. I mean, the other two reasons why there are more people in DeFi is one, because a lot of them are using decentralized exchanges to trade meme coins, because the meme coins weren't listed on the exchanges, and we just had a massive meme run, and that's why you're seeing this huge growth in DeFi. The other reason is I think that we've got crypto veterans here at the moment. And I think that these crypto veterans, we've washed out all the retail traders, and the people that are left here are real, like, crypto veterans. And so I think that these crypto veterans are more comfortable using decentralized exchanges. But I'm going to plug a sponsor here because I think it's super important that you understand this. Even though you think you're trading on a decentralized platform, most of these platforms have centralized front ends, like Uniswap. Uniswap is a protocol and it has a Uniswap front end. When you trade on the Uniswap front end, that is a centralized company, and I think that centralized company is actually domiciled in the United States. And so I keep saying this. In fact, let me actually show you how simple this is. Even though you think, hold on a second. So you need to get, even though you think you are surfing anonymously, you're not, because you are exposing your IP address. Go and get yourselves a VPN. There's a NordVPN link over here. Click on the NordVPN link, use a VPN, because you are then masking your IP address. Don't say that you haven't been warned. For $3 a month, you can protect your IP address. Even if you are in DeFi, it does not mean that you're actually hiding your IP address. Even if you're using these decentralized exchanges, it does not mean that you're hiding your IP address. These can be subpoenaed by the US government, and they have been subpoenaed by the US government in multiple cases. Also, I do encourage you guys to start using the decentralized exchanges, whether you're trading derivatives or trading spot. Try and use a decentralized exchange wherever you can. It's just safer, I think, than using a centralized exchange. If you are trading derivatives, try Gains. They're also one of our sponsors. Just try them below. They are growing really, really fast. I think really a great platform. Growing very fast. 13,000 traders, 35 billion in volume. So you can't really see that. There we go. Let me raise it above my head so you can see it. All right, so that's that. And I do want to talk about the other reason why people are actually using decentralized exchanges or DeFi, why the DeFi use case is actually growing. And it comes down to this chart, which we've been watching for a long time. And to be honest, I've been a real skeptic about this chart. And the reason why I've been a real skeptic about this chart is we keep talking about this ETH BTC trend changing, but up until now, it's only been Bitcoin, Bitcoin, Bitcoin. And so yesterday, when we had the first daily close above this chart, I kind of said to you guys, look, I'm not buying this, that the ETH BTC trend is actually changing. But now, like, we're clearly above it. And so you got to maybe look and say, if you believe that the charts are indicative of what's about to happen in the markets, if you believe the charts tell the story before the news tells the story, you got to look at the case for Ethereum. And in this case, I actually don't believe that Ethereum is an altcoin or a proxy for altcoins. Because every other time that we've looked at Ethereum, we've always said ETH. And when ETH BTC breaks out, that is our proxy that alt season is about to begin. This time, I actually don't think that's the case. This time, I think it's ETH because it's ETH. It's not because it's alt season. I think it's ETH because it's ETH. And the reason why I say that is because I think that the dynamic of ETH has completely changed. And what's changing the dynamic of ETH is a is a whole lot of the network upgrades and all the dynamics that it brings with it. So the first dynamic is the EIP 1559, which made ETH deflationary. A percentage of ETH is burnt with every transaction. So you can see that if you go to ultrasound.money. So let's quickly go to ultrasound.money. And what you can see here is you can see that up until now, 12,000 Ethereum have been burnt. Is that up until now? That's 7 days. That's in the last 7 days. 12,000 Ethereum in the last 7 days have been burnt. Now, that's the first part of it. The second part of it is the fact that they ran the Shanghai upgrade. And in this Shanghai upgrade, what you can now do is you can unstake your ETH, right? So up until a while ago, you could only stake your ETH. When they ran the Shanghai upgrade, or they changed it, they called it the 𝗕𝗏𝗧𝗪 upgrade, or what do they call it? 𝗕𝗏𝗪 and Shanghai. So they changed the upgrade, and then you could withdraw your ETH. And that got a whole lot more people to actually stake their ETH. So now you have a dynamic where you have two of the major assets. The first one is not deflationary, which is Bitcoin. And the second one is deflationary, which is ETH. The first one doesn't actually earn yield on the platform, on the network itself, and the other one does. So ETH actually does earn on the network itself. Now, what you can see here is that ETH staking is actually going parabolic. We were scared that people would dump their ETH when they could unstake their ETH. But we're actually seeing that it's the exact opposite. What they're doing is they're staking their ETH to try and get more returns. And when I look at it today, 15.71% of the total Ethereum in circulation is actually currently being staked. It's a big number because before the 𝗕𝗏𝗪 upgrade or Shanghai upgrade or whatever you want to call that upgrade, only about 6 or 7% of the total Ethereum was being staked. Why? Because people were worried that if they staked their ETH, they wouldn't be able to unstake it and they'd want to sell it. Now you can stake and you can unstake. And in fact, there's a long line of people who want to stake ETH right now, and they've got to wait in the line to actually stake ETH and actually get the reward. This is also created two new industries. So the first industry that's created is what we call liquid staking protocols. How does a liquid staking protocol work? If you've got one Ethereum, you want to stake your Ethereum, you can't stake it as a validator because you need 32 Ethereum to be an ETH validator. What you can do is you can go to multiple websites and they will stake your ETH for you. They'll pool it and you can they will stake the ETH for you. Let's actually look at it like this. And you can see that, the biggest is Lido. It's got $12.9 billion worth of ETH stake. Then Coinbase has got $2.1 billion worth of ETH stake. Then Rocketpool has got $1.3 billion in Frax and Stakewise. And they all give you an APY for staking your ETH. But that's not all they do. Because when you stake your ETH on these platforms, and I want to show you how simple it is. So let's go to Lido Finance. Did you see what the second search result was? Lido cocaine. I wonder if the search is personalized. So if you want to stake your ETH, you come here and you stake your ETH on Lido Finance. And when you stake your ETH on Lido Finance, I don't think I've got a wallet connected here. What you receive is you stake your ETH and you will receive what they call ST-ETH. Now, what is ST-ETH? ST-ETH is like a slip that says, I have put in money on Lido Finance, and this is my receipt. This is my token that proves that I have money on Lido Finance. It's called ST-ETH. And that ST-ETH token is actually tradable. So again, if you have an ETH and you want to earn yield on ETH, you take your ETH, you go to Lido Finance or any one of our other liquid staking protocols, Lido, Coinbase, Rocketpool, Frax, Stakewise, Binance, Anchor. You can stake it anywhere. There's a whole list of these players. And you can get yield. And the yield ranges from 4% to 5%. And they all give you this derivative token called a liquid staking derivative. Lido give you ST-ETH, Coinbase give you CB-ETH, Rocketpool give you R-ETH, Frax give you SRFX-ETH, and you get this token. But now there is a whole new world of things that you can actually do with these tokens. So you can take your ST-ETH and then you can earn more yield on your ST-ETH. Now, it doesn't come without risk. Obviously, it comes with risk. But the first thing that you can do is you can take your ST-ETH and you can put it into pools. What are the pools? The pools are liquidity pools, like liquidity pools for decentralized exchanges, for Curve, for Balancer, etc. And you can earn between 2.5% and 7% on these pools. But that is not the exciting part of the industry. In fact, there's another whole part of the industry, which is, it's just been born. It's a whole bunch of places where you can stake your staked ETH, and you can earn yield on your staked ETH, and you can get use cases on your staked ETH. So for example, you can go to Libra Finance, you can stake your staked ETH, and you can get 57.08% return if you stay. Is that right? That sounds like a very high number. Let's quickly go there and have a look here. Okay, so yes, you can earn a very, 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 very high interest. Of course, it does come with risk. Then there are two new protocols. One of them is Tenet. Now, what Tenet allows you to do is it allows you to actually validate transactions on their network using your staked derivative tokens, your staked ETH tokens, your ST-ETH and your Rocket Pool ETH and all your other ones. It's a blockchain, and this blockchain, instead of using its own native currency to validate transactions, allows you to use liquid staking tokens to validate their transactions. The other one is a protocol called Prisma Finance. Now, what is Prisma Finance? Prisma Finance is a protocol which is backed by some of the most, we're investors too, but we're not as impressive as all these guys. It's backed by the Curve Finance founder, Convex Finance founders, Frac Finance, Conic Finance, Tetranode. This is a list of the people that backed it. And effectively, what it allows you to do is it allows you to stake your tokens and actually print a new stablecoin called ACUSD. And then you can start spending, you can start staking this ACUSD. So I think that the reason why ETH BTC is breaking out is because people are seeing that on Ethereum, there's actually a whole new industry, which is liquid staking protocols. And on top of the liquid staking protocols, there's this new industry that's above that, and it's called LSD-Fi. I mean, I kid you not, it's LSD-Fi. It's not as fun as LSD, but it's fun. I don't know if you're allowed to say that on YouTube, but okay. I mean, it's not as fun as LSD is, but it is fun. What else is there? Well, there's a lot going on. Okay, so we spoke about decentralized protocols. And remember we spoke about decentralized protocols. I said, you know what, sometimes these decentralized protocols aren't actually as decentralized as you may think they are, right? And here's a great example of a protocol that we thought was, I think, decentralized, and it's not. The protocol is called multi-chain. It used to be called AnySwap. Now, what this is it's a bridge. It's a cross-chain bridge, and primarily this bridge sits between Phantom and a whole lot of other chains. And today, there were rumors about this bridge that the founders got arrested, and the rumors were denied. Okay, so the rumors were denied. People said the multi-chain founders were arrested in China. The rumors were denied. Okay, then we get this tweet from them. It says so in the past days, the multi-chain protocol has experienced multiple issues due to unforeseeable circumstances. The team has done everything possible to maintain the protocol running, but we are currently unable to contact the CEO and obtain the necessary server access for maintenance. Can you believe what you're actually reading here? So they can't get hold of a CEO to do what needs to be done. It says, look, the affected chains are all of these chains. Now, because this is a bridge that primarily bridges things into Phantom, okay, it's really, really, really hit the Phantom ecosystem. I want to actually just show you the Phantom ecosystem. So here we go. The multi-chain issues have naturally led to an adverse effect on the Phantom network. Data shows KPIs over last week are bad. DEX volume down 38%, TVL down 22%, and I think the price of Phantom also went down. So that's the first part of it. The second part of it is that we're now getting rumors that Gate.io team has been arrested. The multi-chain team has sent Gate $10 million in Phantom. I think that this is garbage. You may read it. Gate have come out and said that this is garbage. It's not true, but you can see that the Gate price has actually gone down. So yeah, that's a good one. All right, now let's talk about the fun part of the show, the real degen part of the show. This is the part where I'm going to show you a couple of tokens that I think are really, really, really good. One of them I think I have some alpha here that nobody else has. I really think that I have some. Well, no, I think I'm the only one who's actually got the guts to say it. Okay, so this is degen, but you got to work with me here. Okay, so if you're ready, let me know that you're ready, because I mean this is like really degen stuff, really degen stuff. Hold on, let me actually call up this chart and make sure we have the right chart here. I even see Siri starting to listen to me now. So. Astroport. Okay, so I want to show you this. So there is a token called Astroport, and I want to see if we can actually see it here. Here we go. There's a token called Astroport. Here is the token. You can see that this token in the last couple of days has had a huge dump. It went from being 10 cents to being 3.8 cents. Now, what is Astroport? Astroport is a project that was originally launched on Luna and then was migrated to Cosmos, and it's being backed by the team at Delphi. It's one of the projects at Delphi Digital, who are great investors in the space, are actually backing and I think co-developing. There was a big dump of the token. There was a whale that sold a whole lot of his tokens. Now, Jose says, from Delphi, he says, look, to be absolutely clear, neither Delphi Labs nor any other contributors have sold any of the Astroport or Miles tokens. In fact, none of these tokens have been unlocked yet. And then he says, it should be pretty easy to identify who the dumper is just by looking at the two whales involved in doing some on-chain sleuthing. So we did the on-chain sleuthing. And it turns out that what we think, what we suspect, we can't say we know, because if we said we know, we would be sued. What we think is that the reason, the seller of this is actually Do-Kwon. And so Do-Kwon, who obviously needs money because he's got all these things, he is probably the seller. So why am I telling you this? Because go and do your own homework. But if we're right here, and we may actually be right, if we're right, then maybe this is a good buy, because maybe he's finished selling and then this will just go back to its fair value, which is around 10 cents. I'm not telling you to buy it. I'm just telling you that this is the research that we have actually done, and this is what we've actually come out of. I also saw this with Phantom. Phantom's starting to pay developers to generate fees. So if you build an app on Phantom, you get 15% of the fees that it actually generates, which I think is quite a cool model. It really is a good model. What else is there? I think that is it. Let's go to the research group and just see this. I see there's 30 messages in the research group. Let's see if there's been anything breaking while we are here. Not much breaking, to be honest. So listen, what we're going to do now is, as usual, at quarter past the hour, which is 10 minutes from now, we are going to go to 𝗏𝗏𝗜𝗏's spaces. Remember, we've got a partnership with 𝗏𝗏𝗏𝗏 and Mario Norful. We're going to go to their spaces, and we're going to bring you crypto love and crypto wisdom on the spaces. So it's going to be fun. Go to 𝗏𝗏𝗏𝗏's profile. We'll start there in about 10 minutes. So I'll see you guys when we get there. Until then, trade well, my friends.